Hey, what's going on, everyone? Welcome to the another VA Power half hour because we're so busy, we don't want to take too much of your time. But I got my man Justin Chermak from what is it? I'm sorry, I forgot the company. Contour.
Contour Mortgage. Yeah.
Contour Mortgage, right up there in New York City, where it is the state where it's the hardest thing to do anything out there. So,
Even to just drive is difficult.
right? So cool. All right. So today we're talking about the VA appraisal. And I had a couple of instances last week, and I'm sure Justin, you've had many throughout the time you being a loan officer. The VA appraisal is one of the biggest things that is misunderstood by not only veterans, loan officers, and also real estate agents. And so it oftentimes keeps a lot of veterans from getting their offer accepted. Just a lot of things that just really negate a veteran or military member getting into a home, right? And I know it's hard to believe that, but it happens, and it happens a lot. So today we're going to talk about the VA appraisal, what that process is, okay? We're going to talk about what's called Tidewater process, what's called the ROV or reconsideration of value process. That's the two ways that the VA allows us to impact the appraised value, right? And then we're also going to talk about what's called MPR waivers and minimum property requirements. That's if you have a repair. And then we're going to touch on escrow repairs with that. So, all right. So the VA appraisal, the funny fact is that I hear a lot from agents is that, VA appraisals come in lower because they're VA appraisals. And the funny thing is the same people that are doing conventional appraisals and FHA appraisals are doing VA appraisals. It's the same appraiser. It's just there's some appraisers that are registered with the VA and there's some appraisers that are not. The funny fact is that the VA actually holds appraisers to a much higher standard, right? They have much tighter timelines that they have to get out there and do their job and turn it in. And there's a lot more requirements put on the appraisers by the VA, and they could actually be kicked off the VA panel if they don't work with the loan officer or the realtor. You don't have that with FHA or conventional. And so there's a little bit more oversight with the VA, right? Making sure that the appraisal is done properly and that the appraiser is actually doing their job, okay? The other thing too is that, with the VA appraisal, we have several opportunities to influence the value, right? We all are familiar with the ROV or reconsideration of value process, but the VA has two processes put in place to help or ensure that we get the highest appraised value possible, if not the sales price. And those are Tidewater and ROV process. Justin, I will let you take it from here on Tidewater and ROV. So tell us what Tidewater is, what's that process, and then let's move into ROV and what that process is.
Definitely. I like how you opened. There's no difference between a VA appraiser and a regular appraiser or a conventional. They're still going to look at comparable sales values. They're still going to use the same inputs to come up with the same output. The only difference is now we have someone who's actually more qualified as a VA appraiser. So I would always prefer to have a VA appraiser, especially because we don't get to just dispute the value one time. We get to dispute it twice. So you can't do that with any other loan product. There's not a single other loan product that will allow you to dispute the value two separate times. Now, the first time you're doing it, you're disputing with the appraiser. And the second time you're doing it, you're disputing directly with the VA. But let's open up into disputing with the appraiser, right? That's called Tidewater. So I actually like the moniker Tidewater because it basically means like the house is underwater, So that's quite literally what they're referring to is they're letting us know and saying, hey, listen, this appraisal is going to come in low. It's going to come in light. And they give us Tidewater, they initiate it before the appraisal even comes in and gets certified, So before the appraisal gets certified, we know ahead of time that the appraisal is going to come in low, so we get that Tidewater, the appraiser gives it back to us on the lending side. And now we have 48 hours, key point, 48 hours to dispute that amount in Tidewater directly with the appraiser. And basically what the appraiser is saying is, I don't think this is going to come in for the value you guys are projecting it at on this contract of sale. I need some help. Help me out. That's what they're asking for. So what we have to do is we have to work with the listing agent and or the buyer's agent, whoever wants to help out. We're all one team, one fight here. We have to go in, we have to dispute that amount. We're given the chance to do that. We can pick out between 3 to 5 comparable sales. I always say, just give me a good solid 3. And we actually have a template that we send out to agents where we say, hey, listen, this is the template. And it looks very similar to how an appraisal looks with the same line items, going down. Find me a property that is, sold within the last year, within a mile of the, of this house, that is the same style, maybe built in the same area, time frame, has the same beds, baths. Find us 3 of these properties so we can submit them over and we can do Tidewater with the appraiser. I don't know, do you want me to touch on ROV next or?
Yeah. And so what that process is, it's an opportunity. When you talked about certifying the appraisal, right? Different states, what I have found, right? Because I'm licensed in Arizona and Texas, and I have done some work in other states, like Florida and Georgia and stuff like that. But here in Arizona, most of the time in Arizona and in Texas, you get the ROV before the appraiser has even stepped foot into the house, right? They're just doing their due diligence, just like a listing agent would or a buyer's agent would. Like, hey, I think this house is priced right? Mm-hmm. So they're pulling up that comp and like, I just don't think we're going to get there. That's when they initiate Tidewater, right? Other states, they'll do the appraisal. They're like, yep, I'm not getting there. They'll send it out. And what they're talking about is sending the appraisal to the VA for it to be certified. So before the appraiser sends it to the VA to be certified, they'll initiate Tidewater. So that gives us 48 hours. Some appraisers will give you more to send those additional comps or list of upgrades or whatever it is to help influence that value to get as close, if not to appraised value. So, all right, so Tidewater didn't work, right? We had a list price of $350, home came in at $325, right? So Tidewater doesn't work. What is our next step, Justin, with the ROV process with the VA?
Yeah, so ROV, very, very simply put, now we're taking that same, templated grid that we sent over where we said, hey, here's our 3 comps. Now we're just sending it, instead of to the appraisal management company, we're sending it directly to the VA, So it's the same thing where now we're taking, the VA is actually going to take that appraisal report and they're going to take the comps that we submit over and they're going to see if they can try and extract some more value out of it. Now, the great thing about all this, there's actually a statistic that if you do Tidewater and ROV, 78% of the time, you will get more value. Okay, so that's a 78% success rate. But another statistic that's even more astonishing is the fact that of all appraisals that have come in short for VA loans, only 5% are actually disputed. So only 5% are actually disputed. And that's because of the fact that nobody knows you can do Tidewater and reconsideration of value. So they don't actually get a lot of disputes. So 78% success rate, but a 5% usage rate. So there's definitely a lot of veterans or active duty service members who are out there who have an appraisal come in under value and they just accept it for what it is. You don't have to do.
Who's responsible for that? Like, really, let's call it is what it is, right? And I think where I'm going with this, right?
Yeah, it's the lender.
Our industry. It's our industry.
Yeah.
You know what I mean?
Yeah.
Now, I don't want to say the lender or the realtor, but it's our industry.
It's our industry who doesn't know, because the average lender or the average real estate agent in a 12-month period, they'll see between 0 to 1 VA loan. Unless they're someone who niches into this, like how you and I do, they're not going to see it that often. But going back to the ROV process, I mean, look, it's the same exact thing. We're taking that templated sales grid, we're submitting it out to the VA. Now, it does take a decent amount of time for them to actually review this. I've had it take as long as 2 weeks in the height of the pandemic, but I've also had it come in as quickly as 2 days. So
it's never been more than 5 business days for me. So
yeah, so that's pretty decent, you know. During the height of the pandemic, when we were all like running around with our heads cut off, like that's a little bit of a different story, I guess.
right.
But you can expect this to take some time. But look, the bottom line is we can dispute with an appraiser and we can dispute with the VA. So we actually have some oversight there that helps us to make sure, because, you know, not only does the appraiser have a duty to assist the veteran, but so does the VA, and the VA has an even higher duty to assist.
Yeah.
So
There's a comment from Jim Bell, right? I can't remember verbatim, but it is their focus. It is their mission, right, to get veterans into homes. So,
Yep.
so when we work directly with the VA, right, you have a much higher chance of getting the movement, right? Whether it's underwriting or joint loans or whatever it is, right?
Yeah,
We're now interacting directly with the VA, and their mission is, their mission is to get veterans into homes.
yeah, yeah, and that's their mission. And another thing that they'll take into account too is one of the ways that the veteran or the active duty service member, you know, can get involved in this process is by writing up a letter, you know, by by writing a letter and stating, I know that the appraised value came in at X amount, but I believe the purchase price should be this amount. I was, you know, like we have a templated letter that we use, and it basically says like, you know, we've been looking for a house for a long time. This is the, you know, house of our dreams, if you will.
Yeah.
And we think that this could negatively impact our ability to purchase the property if you don't give us X value. And we think it should come in for X value because we have comps A, B, and C, you know.
Yeah.
And it's actually a pretty nice letter. So when you submit all that stuff in, you know, you're more likely to get a success rate and to get something back. You know, maybe you won't go from 325 back up to 350, but maybe you go from 325 back to 340. And now your appraisal gap is only 10 grand, you know, and that's much easier to go into negotiation with for $10,000 versus $25,000. You know, maybe you've got a good seller who says, yeah, I'll cut it in the middle. I'll eat 5K. And then, you know, the service member has to come up with another 5K, you know, a nice happy medium. And it kind of stinks that it came in undervalued, but now it doesn't affect you. Like it doesn't completely defeat you from being able to buy the house, you know?
Right. And something I kind of always, I think I always say this in every video when we're talking about these things. You're talking about the 75% success rate, but only 5% are submitted, right? Is that submitted to the VA for an ROV process, right?
Yeah.
Tidewater is going to be initial. Okay, so 5%.
Yeah.
Here's the thing. Whether you're a buyer's agent or a listing agent, more importantly, if you're a listing agent, and you know, I say this all the time. If you're a listing agent, you need to know this stuff. If you're accepting a VA offer, okay, that's your commission check. That is your client, right? Selling that house and moving on to their next house, right? Hopefully you're helping them, right? You should know this stuff, right? Because if the agent or the loan officer, you get that email say, hey, the appraisal came in low. Sorry. Can your seller come down $50,000? You know, it's like, well, no, let's submit an ROV, right? Maybe that loan officer doesn't know about it because 5% submission rate. So if you're a listing agent, these are things that you can have in your book or knowledge-wise to help, you know, sell that house, right? Especially if you're accepting a VA offer. I know I'm on my soapbox. I got to stay in my own lane, but at the end of the day, if you're going to accept a VA offer, right, you should know all these things because it's going to make you a better professional in our industry with that. So,
and it's going to increase closing, you know? I said, and it's going to increase your chances of closing. So
for sure.
That's what real estate agents care about, right? Getting to the closing table. So if this is a way to help you get to the closing table, you should know it, you know, 1,000%.
Yeah, for sure. Okay. So, Tidewater, reconsideration of value process. We've covered that. Let's talk about the dreaded, you know, well, the VA, you know, requires all this crazy stuff. You know what I mean? For a property. I've heard that so many times. Yeah, they do. They have minimum property requirements. They don't want a veteran purchasing a lemon, right? They want the veteran to be able to occupy a safe home that's sanitary, structurally sound, right? And so the other thing is MPR waivers or minimum property requirement waivers, right? Um, the VA loan has a long list of items, but the big three is that it has to be safe for the veteran and or their family to occupy. It has to be structurally sound, so it can't have, a little lean to the left. And it has to be sanitary, meaning that the toilets and the drains have to function well, they have to function. I don't want to say properly because we're going to talk about that. So, as long as we don't fall into those categories, we can actually, if you get a subject to appraisal, you can actually submit a minimum property requirement or MPR waiver to the VA. So that way the seller doesn't have to correct the repair items noted on the appraisal, nor does the veteran have to pay for it or whatever it is. But it gives you an opportunity to get a waiver per the VA. I've done several of them, Justin, I'm sure you have, but it allows you to get a waiver per the VA to not have to get those items repaired. You can move forward with the transaction and get it closed, right? And these are minor repairs with that. I'll let you give your 2 cents on that, Justin, as far as MPR waivers.
Yeah, I mean, look, it's not like, again, people think that a VA appraisal is so much different than a regular appraisal for conventional or FHA. It's not. It's not at all. If the house is leaning to the left, it doesn't matter what type of appraisal it's going to be. Someone's going to say something and say, yeah, the house can't be leaning to the left. Like we can't have a structure that's about to collapse. I'm sorry, we're not going to finance that. Right. So it's not like we're talking about different things, but the actual strong point here for the VA loan is that we can get waivers for things that don't fall into those 3 S's that you just mentioned, So we can actually just waive it altogether. So if you get an FHA loan and the FHA loan says, hey, that fence out back that's falling over needs to be fixed in order for us to, approve this value, guess what? You got to fix the fence. But if you're doing a VA loan, well, now the veteran's going to write a letter saying, yeah, I don't care about the fence. It doesn't affect me. And what are we going to do? We're going to be able to waive it. We're going to be able to get rid of that thing, So if it's something that's simple, if it's cosmetic, if it's not like that big of a deal, if it's not like, if the house has electric and running water, and there's not like wires hanging down, like, something completely unsafe, we're going to be able to get a waiver for that. And that's a huge thing because a lot of times those repairs, especially when you have a difficult seller, and everybody's got a difficult seller, all sellers are difficult, you got a seller who doesn't want to repair anything, and you've got a buyer who doesn't want to fix anything because they don't own the house just yet. Well, we can get a waiver for it, or we can do something else creative, which I'm sure you'll touch on.
Yeah. Escrow holdbacks. And one thing I want to touch on a story, because this is the most, I love this stuff. So I had a house, had a detached little like shop, painting studio, or whatever you want to call it. It was completely dilapidated, right? So the structure where they would occupy was fine, but the detached on the land, the detached property that was dilapidated was complete disaster, right? Of course, the appraiser noted, this house is ready to fall down, please fix it. Right.
Yeah.
And it was going to cost whatever, like $10,000 or something like that. Here's the cool thing about MPR waivers, right? Hey, this house or this detached unit is not attached to the main living facility. So can we go ahead and get a waiver to repair or to reconstruct this detached property? Yes. We got the waiver, so we didn't have to do anything to that detached property. Here's the catch though, right? If that detached property had any type of input or, addition to the appraised value, and we get a waiver on it, then you'll lose that value. So let's just say it's $5,000, right? You could potentially lose $5,000 in value. Here's the thing. You either rebuild that whole structure, right, and spend whatever you need to rebuild it, or you get the MPR waiver, get the little loss in value, right? We were still able to get to the closing table. And I mean, that is an extreme example of using an NPR waiver, but a very good one, because if the VA is allowing you to do something like that, very simple repairs are going to get done, and we're going to get to the closing table.
Yeah. No, exactly. That's going to be a huge help. If I had, say, for instance, I'm buying my house and I have a shed in the back, and the shed, let's say it was falling apart, we just exclude it from the value. And we get a waiver for it. This way we don't have to go in and I don't have to scrape the paint and peel the paint off and and fix the actual shed, whatever's wrong with it. So it's a pretty huge thing. Another thing that saves deals.
Yeah, it does. And that's a big thing too. Again, if you're a listing agent, you have something like that, right? Again, knowing that you can get waivers on minimum property requirements is going to allow you to sell more houses, even when you're accepting VA offers. And then that's going to lead me into our last point is escrow waivers. I think we touched on it the last videos, but escrow holdbacks.
Escrow impounds.
Escrow waivers, put it on there.
Escrow waivers.
You can get an escrow waiver on VA loan if you want to. So escrow waivers, again, it's a great opportunity. I know we can do escrow holdbacks for all loan types, but not every lender, most lenders won't do an escrow holdback on FHA or conventional. The VA is one of the only loans that allows you to do an escrow holdback. Example would be, hey, the roof needs to be repaired. Whatever it is, right? We can, and the seller doesn't want to pay for it. The buyer obviously doesn't want to pay for it. What do we need to do? Well, we can do an escrow holdback. We just need to have 1.5 times of the cost of the repair or whatever it is, put into the escrow account. It can come from the seller. It can come from the buyer. It could be a 50-50 thing. It doesn't really matter. But again, it allows us to get over that hump that would typically kill the transaction. We can get to the closing table, veteran gets a new house, seller sells their house, gets a new house, everybody gets paid. After a close of escrow, the roof gets repaired, the appraiser goes back out there, certifies it's done in a workmanlike manner, and we're good to go. And that, I'm not oversimplifying that process. You need one quote from a contractor, and that's all the VA requires. One quote from a contractor, 1.5 times in the escrow account to pay for that repair. That is it. And that is not an oversimplification of the escrow holdback.
No, and it's really simple, actually. So it's a funny story, because I just had this scenario, no lie, 2 weeks ago, where I went over to my lock desk, which is a department in our, boring companies. But I had a conversation with them, and I was like, hey, listen, I'm doing an escrow holdback for this repair, needs to get done. Basically I needed the paint, to be chipped and scraped on the trim. And they were like, no, you can't do that. I said, no, this is a VA loan. I can do that. And they were like, no, it doesn't work like that. And I said, no, it actually does, because the VA stipulates it. So I showed him the guideline. And then, so he's a newer guy. He's not as well-versed, especially with VA. And he was like, let me make a phone call, because I think you're wrong on that. And I said, okay. So he made a call over to one of his investors, which are basically like the servicers of the loans. So he called up the servicer, and he says, hey, do you guys approve, escrow holdbacks for VA loans? And the guy was like, yeah, all the time. And he was like, no, but you don't understand. We're holding, $7,500 for this repair on a VA loan. And they're like, yeah, no, we have no problem with it. And he was like, you guys would buy that mortgage note? They were like, yeah, we would buy it with or without their work being done. We don't care, because it's a VA loan. So I actually proved him wrong. It was pretty funny. He didn't like it too much, but I wouldn't be able to FHA, So with VA, you can do that, and there's so many other nuanced things that you can do with VA that you can't do with any other loan. And it's really a shame that VA gets such a bad rap for being, the weakest loan product out there in the eyes of all real estate agents. Yet meanwhile, it's arguably the strongest, because there's the most different, you have so many different things you can do to get to the closing table.
And here's the thing, and you said it right. An individual, he thought you were wrong, wasn't well versed. That's fine, whatever. Sometimes I'm wrong. Even on VA stuff, I'm kind of going through stuff, and I'm like, man, really? And I'll reach out to you or whoever, right? And double check me on this, right? The point is that so a lot of the agents that I call, they are working with a bigger veteran company, right? And my pitch is like, look, like I can get more veterans qualified. I can get them qualified for more. And I know the VA handbook like the back of I wouldn't say like the back of my hand because there's still things I'm doing all the time, right? But I know the VA handbook very well. If not, I have a great resource, or I have a great people I can reach out to, right? Or I just call the VA Regional Loan Center. The thing is that the VA gets the bad rap. It's because there's underwriters, there's loan officers, and there's agents out there that just they just don't know. And the underwriters turning it down and say we can't do that, right? And so they think that is gospel when it comes to the VA loan, which is the furthest thing from the truth, right? What I always tell agents or whoever is like, look, if you get a VA loan turned down or denied, always get a second opinion. Always get a second opinion. Whatever it is, find somebody that says they're a VA loan specialist. Doesn't mean that they are, but hey, at least if they're putting that title on there, they probably know a little bit more than that.
Probably know a little bit more, yeah.
Exactly. So always get a second opinion, because at the end of the day, if they turned your loan down, Justin, for the escrow holdback, and I was in contact with them and I'm like, oh yeah, we can do this all day, right? Boom, we get it done. You know what I mean? But now you've learned something. You can go back to the underwriter, hey, this other guy got it done. But the thing is, like you said, the VA loan is one of the most versatile loans when it comes to qualifying the veteran. We have a lot of leniency when it comes to income, underwriting guidelines, everything. And obviously what we just discussed, a lot more leniency, a lot more ability to get things done when we have a low appraisal, when we have repair items, whatever it is, right? With that's got to be a Marine thing. So, but anyways, that's my rant. So, all right. So VA appraisal, right? The appraisal process is no different than any other appraisal process out there, FHA or conventional. The appraisers that are doing the FHA and conventional loans, they're also doing the VA loans as well. The difference is that they're held to a higher standard with the VA process. And so if they're not communicating, if they're not getting things done on time, or just having just doing a good job, they can actually get kicked off the panel because they are graded all the time. You have two opportunities to influence the value, right? Tidewater, that's a dispute directly with the appraisal. And then you have the ROV process. That's a dispute directly with the VA, right? Which it has a 75% success rate. I would not saying it's going to go to appraised value, but you'll get an increase in value. So then that negotiation or whatever it is between appraised value and sales price is a little bit more palatable than a bigger, right? Exactly. NPR waivers, right? If you have a repair item on your VA appraisal, right, you can actually submit for waivers. And then that way you don't have to get those repairs completed prior to close of escrow, okay? And then finally, escrow holdbacks. Plenty of opportunities to have large repairs done after close of escrow, whether the seller pays for it, the buyer pays for it, they both pitch in. Escrow holdbacks is a very simple process and a very simple thing that could be put together on a VA loan. Again, allows you to get over that typical deal killing issue and get to the closing table and get it done. So that's all I got for today, Justin. Any last words before we have 30 seconds?
No, just, make sure that you guys knowledge is power. Knowledge is everything. And if you don't have knowledge, you can't use it. That one fact I gave before, 78% success rate, but 5% usage rate with Tidewater and ROV. So, that just goes to show you that's why we need to keep putting the word out there and spreading the gospel about VA loans, because they are superior, not inferior.
Absolutely. And always get a second opinion. If your veteran buyer cannot get pre-qualified or approved, or if you have a deal that's not working out, always get a second opinion, especially with the VA loan specialist, Justin or myself. And like for me, 70% of the deals that are getting turned down elsewhere, I'm able to get them done, right?
Yep.
Just how much we can go deeper in the guidelines, really know the handbook very well. So, all right, Justin, appreciate you. We'll do after action review and talk to you guys soon.
Cool.